Let me ask you a question. Have you ever missed a perfect trade? Like you saw the move, you even told yourself, this is a high probability setup, I'm going to jump in. But when the market tap into the point of interest, you start looking for opportunity to jump in, opportunity to enter the trade, and boom, the market took off without you and went straight to your TP. Or maybe you are that trader who used to jump in too early or too late, only for the market to turn around and hit your stop loss. Trust me, I know the pain. It feels like the market is personally against you, or maybe you think your broker have a camera in your room waiting for you to press buy or sell. Every trader is going through this problem, but there is a way to solve half of the equation. Now here is where it gets interesting. Most traders think that they need to change their strategy, they need to buy expensive indicators, they need to buy some trading courses, they need to apply for trading classes. But whether you change your strategy or not, a problem is a problem and it will continue. You have to find a way to reduce this problem, and that is why I'm producing this video. The purpose of this video is to help you catch some trades at the perfect entry. That is, eliminate entering too early, too late, or even chasing the market. If this sounds interesting, then make sure you watch this video to the end, because at the end of this video I will also share some tips that can help you increase your win rates if you want to use this trend line strategy. And also don't forget to click that subscribe button, turn on the notification bell, and like this video so you can get notified whenever we drop a new video like this. And also it is going to encourage us to drop more videos like this for you. And also we have trading community where we share trading tips, trading signals, and also more updates that can help you in this forex trading. So if you are interested, check the link in the description of this video, and also I'll pin the link in the comment box. The amazing thing about what I'm going to expose in this video is that you can add it to your strategy. That is, if you are trading with demand and supply, support and resistance, fair value gap, trend line, Fibonacci, moving average, any indicator or otherwise, you can still use this trend line as entry model. I'm going to expose everything you need to know about using trend line to identify the perfect entry. So without further ado, let's jump in. So before we jump to the charts, you need to understand what makes a trend line valid. Okay, before you draw a trend line, make sure that the market is moving in waves or trending market. Okay, because if you look at this illustration, you will see that the market is currently trending up. Okay, that is why this trend line is valid. Or you can say that the market is moving in waves. So to draw your trend line, you must get at least 3 touches. Okay, a valid trend line must have more than or at least 3 touches. You cannot just get 2 touches in the market and call it a trend line. You cannot get these 2 touches and say it's a trend line. A valid trend line must have 3 touches. So once you get 3 touches, you extend that trend line so that you will watch out for any time the market breaks this trend line. That will provide a buying or selling opportunity in cases maybe. Okay, so that is for uptrend. Okay, just remember that in uptrend, a valid trend line must have at least 3 touches and the market must be in uptrend. What I mean in uptrend is the market must be breaking structures. You see, here is break of structure, another break of structure, and another break of structure. So here is a valid trend line in downtrend. This is valid because we have more than 3 touches. Okay, before you draw your trend line, if you can get at least 3 touches, you cannot draw a trend line this way and call it trend line, because this is just 2 touches. You must have at least 3 touches before you call it trend line. So once you get 3 touches, you extend that line, you extend it so that anytime markets break this line, you can look for selling opportunity in the case maybe. Okay, if you look at this, you will see that the market is moving in waves. This is downtrend because the market is breaking the lower lows, creating new highs and new lower lows. That means the market is currently trending down. So if you can get at least 3 touches, then you have your trend line. For example, this one is not a valid trend line because what we have here is just 2 touches, 1 touch and 2 touch. Okay, but the market came down and make a new touch before creating another high, then we have 3 touches. But for now, this is just a line, not a trend line, because what we have here is still 2 touches. So this is invalid trend line. If you come to this one, you will see we have more than 3 touches. Remember, a valid trend line must have at least 3 touches, but this is not a trend line. Why? Because a valid trend line must have more than 3 touches and the market must be either trending up or trending down. As you can see here, the market is not creating any highs or little here, which means the market is just ranging between this top resistance and this line. This is not a trend line until we have something like this. Okay, then we see it's a trend line. But since the market is just ranging inside this zone, since the market is just ranging inside this zone without breaking structure here, it means that this is not a valid trend line. This is a ranging market until we have the market to be moving in a trending market. Okay, then we say it's a trend line. But for now, since the market is ranging inside this zone, this is not a trend line. Remember that a valid trend line must have 3 touches at least, and the market must be either trending up or trending down. So if you want to use trend line to get a perfect entry, now there are things you need to watch out anytime the market breaks that trend line. For example, here we have a valid trend line. The market is trending up. Okay, the market is trending up, and the market came to this high and sweep it before breaking this low. So if you get this type of scenario, this is a high probability setup. Why? Because 1, the market swept the previous high, broke the recent low, and also break the trend line. So you enter the market when the market wants to test the trend line. Your stop loss should be very clear above this high, and your TP should not pass this level. Okay, don't mind this illustration. This is just 1:6, 1:1.6 risk to reward. So this is very small, but don't worry. If you jump to the charts, you will see how you can get more than 5 risk to reward using this simple strategy. Just like I said earlier, you must use this strategy with any strategy you have, because this strategy is just for entry model. Okay, what I mean is you can add this strategy to any strategy you use, maybe ICT, support and resistance, order block, or indicator. Okay, so and also you must use this strategy inside or around your point of interest. As you can see, this is a sharp supply zone because of this massive hold down here. So I marked out this supply zone, and what I was waiting for is this, so that market will tap inside this supply zone, and I will look for a opportunity to sell it. Okay, so if we go down to 15 minutes time frame, because this is 4 hours time frame, we will look for any time the market is creating waves around this supply zone. So this is the point of interest we are paying attention to. Okay, so you can see the market tap into this point of interest, and if we zoom clearly, you see that the market was moving in waves. So when the market come down to this trend line, it will bounce up again. It come back to this trend line, it bounce up again. Then it come back to the trend line and bounce up again. So whenever you get at least 3 touches, this is first touch, second touch, and the third touch. Now it's strange. We stretch, then we draw this trend line, so that anytime the market breaks it, we look forward to selling opportunity. And we are also going to pay attention to a sweep. There are many ways to identify a sweep. A sweep must have a sharp rejection whenever the market sweep any liquidity. As you can see from this, if we zoom very clearly, this is the previous high. When the market broke this previous high, it did what? It fell down and broke this trend line with momentum. This shows that market took out some liquidities here. So this sell here with momentum shows that market swept liquidity here. And as you can see, this high did not move far away from this high, showing that liquidity was swept from here. So now we have our trend line, we have our sweep, and we have the break of that trend line. So where should be our entry? If you zoom, you will see you have a fair value gap around this trend line. Okay, so if you want to have tight stop loss, you can look for any fair value gap around the trend line break. So that will be your entry. But sometimes the market won't get to that point. So sometimes your entry can start from this level. Okay, because this looks like M pattern. Your entry can start from this area. But the most important thing is enter the market, break the trend line, and break this low. Once the market pull up, the entry should be anywhere around the zone, but your stop loss must be above this high. So let's just say you enter the market at this key level, not at the fair value gap, and put your stop loss above this high. You see, you still made 1:5 risk to reward. You can see this is very simple. This is very simple. If you use this strategy, you can get 1:4, 1:5, or even 1:6 risk to reward every time if you do it correctly. That's it for now. Trendline is a very strong strategy. Whether you want to use it as your main strategy or entry criteria, then it is very, very good. Okay, so that's it for now. If you have any question, don't hesitate to drop it in the comment box. Don't forget as well to join our trading community, and don't forget to subscribe for more videos. For now, I'll see you in the next video. Goodbye for now.